The markets essentially started today. I woke up and they said, okay, we're going to test your patience. This is going to be a patience test. Boy, oh boy, are we in it. Nvidia last night or last evening ended up showing off the greatest quarter I've ever seen in markets history. We're talking about a company that's growing tens of billions of dollars, growing by tens of billions of dollars. Data center revenue grew by $10 billion quarter over quarter. Okay. This is just insanity. The market is down. This is what we end up facing with. These are the, I guess, things that we have to stomach in markets. Nvidia, although starting, pretty well on the day, 196, which would be up roughly about 5%. We've lost all of that. Not only have we lost all of Nvidia's earnings, we are feeling the pain across the board. Palantir down 2.3%. SoFi down 1.35%. We're seeing Hood down 6%. We're back down to 110 on Hood. BM&R down 6%. We're at 27.45. This, ladies and gentlemen, is patience testing. Holy, it does suck. It really does. However, Frasmo here, if I'm saying that right, the jobs numbers did come out. However, I am in complete belief that December cut is not taken away. I actually think we will see a rate cut because although it was better than expected, unemployment rates are still climbing. So better than expected does not mean, the best we've seen. If we go ahead and we take a look just over the course of the last year on unemployment, the United States is now at 4.4%. We'll look at where that's tested to last. But 4.4%, if we end up looking at, we have not seen these numbers since, October of 2021, when that was at 4.5%. Okay. So better than expected does not mean that it's good. I still think that that's cause for a rate cut. Now, we've listened to the stupid Fed comments about how, they're not necessarily looking at mortgage rates. They're talking to construction business owners and talking about how their prices are going up. Yeah, okay. Great indicator. They're not worried about as much of the job unemployment number as they are of inflation. But what is inflation at the grocery store if you don't have an income coming in at all? So, I don't think that this is appropriate. I think that there is a need for 25 basis points worth of cuts, and BM&R finding, by the way, another new low, 27.10. I should just keep the market open. We are in the midst of a bloodbath here. Datadog down 7%. C Limited down 7.5%. Micron down 7.7%, back to 208, looking for potentially lower. Oklo down 8.9%. Now, these are the types of names, like Oklo. No offense if you're in these types of names. I actually understand why these are down. I hope that Oklo does well. I do, because it's great for the data center business. It's great for economies in general if we find new, cheaper ways, to find power. However, at the end of the day, if we're talking about Nvidia being read right now, the SPY being read on potentially those Nvidia earnings, this is not a bubble. This is not cause for concern. This is talking about, one of the greatest businesses that we've ever seen in human history, if not the greatest, putting up numbers that surprised Wall Street across the board. Like, as a team said, okay, ladies and gentlemen, we need to up our prices because these were the greatest numbers that we have ever seen across the board. If you guys don't believe me, let's take a look really quick. So we took a look at Nvidia's average price target from top analysts, that was 245, or sorry, 243 yesterday. It's now 253. That's a 36% upside from where we are today. And if we take a look across the board from, there's a lot of analysts covering this company, but really this was sort of the first one. So we look from November 19th and up. And what we ended up seeing was a price target change from 240 to 250, reiterations on 220, 300, 245. This is an OpenAI thing, the orange thing. This is not a human's perspective. This is, I would give no credibility to this. Okay. 240 to 245, 230 to 250, 261 to 252. These are all today. This is in the midst of a bloodbath. 260 to 252, that would have been a new street high. 235 this analyst that was potentially at the price targets of today, 180, at a hold rating, ended up increasing to 215, still holding that hold rating, still a 15.5% upside. 215 turned to 250. 200 turned to 240, 250. I can just go through a little bit faster, but you're not seeing any price cuts. Okay. We're finding new Wall Street highs, new highs on price targets across the board. Everyone was blown away with these expectations. Let's take that one step further. Let's go ahead and take a look at what they actually are seeing. And mind you, this is as the market is finding, once again, essentially new lows for Nvidia on the day, not over the past 5 days, but 184.23, down 1%. Okay. But let's go ahead really quickly and switch to what just happened on consensus EPS for Wall Street. So if we look yesterday, we saw the fiscal year 2026. So this is actually fiscal year 2025, or sorry, calendar year 25. Okay. It was at $4.54. They increased that to $4.66. This is 1 day later. Okay. So let me try to make this as big as possible. 2027, which is calendar year 26. Okay. 663 to 725. 2027 or fiscal year 2028, 815 to 934. Everything else is not going to be accurate, and it's really far away. But we're talking about in the last month, they've increased their price targets. Growth rates are now holding up at 55%. 1 month trend increased by 3%, 9% for 2027. And 14.6% for fiscal year 2028. These are disgusting numbers. Like, the same thing on revenue, right? We're talking about a company that by fiscal year 2028, so that's by December of 2027, is going to make nearly, and by the way, what does this mean by the time we actually get there? Constant beats, as we've seen in the last 17 quarters from Nvidia, is that they're going to constantly beat. What is the likelihood that this, 390 billion actually turns into 400 billion in that year? That's $100 billion in revenue per year, per quarter. $100 billion per quarter. And that continuously increases. In the last 6 months, they've had to reiterate this and boost it up by 35%. This is how wrong Wall Street has been. Okay. So keep that in mind. Now let's go back and take a look at what's actually happening in the market. Nvidia down 0.7% to 185. If you liked this company yesterday at 185, you're going to love it today at 185. The reiterations, the increased revenue, the increased guidance, the better than expected margins, the comments from Colette that said that the $500 billion runway that they have for the next 5 quarters is essentially just the start, and you could see them increase those targets. That's not their bull case. That's just their current outlook. Okay. That margins are going to stay in the mid 70% along that entire $500 billion runway. They don't want to change it for the next year. So that's staying consistent. Let's think with our heads. Let's stay patient. Markets don't have to be irrational or don't have to be rational. Meta selling off. I'm fully aware, by the way, if anyone is coming in, that this is a potential sign of, hey, you know what? We might not see rate cuts come in December. Now, what's actually funny is that after that report, the unemployment rate caused the Fed rate cut decision, I think, to actually, where is it right now? Let's go check. Yeah, 37%. So it's actually better than yesterday, which is funny. This was at 31% yesterday. It's now at 37.6% of a rate cut. I continue to put my guess on a 25 basis point cut, but there is now a 62% chance that no rate cut is happening on December 10th. Okay. Boy, oh boy. We will have to see. Now, let's go ahead and take a quick listen into some of the other numbers that they ended up getting from the jobs report. We'll check on CNBC for this.
We are just seconds away from that delayed jobs number. We're watching the futures this morning. They're up sharply ahead of that because of what we heard from Nvidia last night. Dow futures up by about 250 points. S&P futures up by over 80. The NASDAQ now indicated up by about 425 points. Take a look at what's been happening in the Treasury market. We have seen higher yields. The 10-year sitting right at 415. The 2-year at 361 ahead of all of this. Rick Santelli is standing by at the CME in Chicago. And Rick, these numbers are much delayed, but still, it's data, and we will take what we can get, right?
Yes, and there's gaps from the last data point to today's data point. There's lots of weeks missing in claims. There's months missing in all the other data points. And here we go. This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 would be the best since April when we were up 158,000. In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected. 4.4 would, last time we were at that level, boy, I have to go back a ways. October of 2021, when it was 4.5%. Now, if we look at labor force participation rate, it ticked up. That's a good thing. 62.4 equals where we were in May. You have to go to April of this year when it was 62.6 to find a higher number. In terms of the earnings, average hourly earnings, month over month, up 0.2. That's a bit on the weak side. We're expecting up 0.3. Up 0.2 equals where we were in June. To find a lower number, you are going in the Wayback Machine to August of 23 when it was up 0.1. Take a year-over-year perspective. This gets better from 3.7, our last look and expectation, to 3.8. 3.8 would be the best since July when it was 3.9 because these have been trending lower. The high water mark, though, for the year is 3.9, and we've had 4 months of that. The first 3 of the year were 3.9%. If we look at the hours worked, and this is always important, it remains at 34.2. To find a lower number, you're going to January when it was 34.1. And finally, we get U6, the underemployment rate. It was 8.1 our last look. It comes in at 8%. 8% would equal where we were in February. To find a higher number, you're going all the way back to October of 2021. Now, we have initial jobless claims. This is for the week of November 15th. As I said, there's weeks missing. We're expecting 227,000, comes in at 220,000. These numbers do not reflect nervousness in the labor market. They've been very well behaved. 220,000 would be the lowest level of claims since mid-July. And finally, on continuing claims, it ramped up just a bit, 1,974,000, and that would be the highest level since November of 2021. We see that interest rates had gyrated a bit, but after the dust settles, they're coming in at 411, which is a bit lower than the 414-ish we were hovering at. The pre-opening equities certainly don't mind these numbers. They're moving higher. We're up 371 and
not anymore. Not anymore. They have completely turned their stance and the SPY is falling. The SPY is falling. Yeah, we almost need Chicken Little here to tell us what the heck is going on. But guys, honestly, I'm going to sound like such a broken record, but the truth is that if you're a believer in the technologies that are being designed right now, they are going to make a more productive economy. Everyone felt bad buying into Hood or SoFi or Nvidia during DeepSeek or during a yen carry trade or anything along these lines. And it was always, time in the market is better than trying to time the market. For me, I continue to bet on the U.S. economy, and it's worked out for me in the past 10 years, and I think that it'll work out for me going forward. I think that everything that you're seeing, even the big companies that ended up reporting today, Walmart ended up showing off good numbers, double beat, that things are doing fine, and that some people are allowed to take money off the table. That's perfectly fine. But doesn't change my investment philosophy. We'll have to see. But as Paul here in chat says, there's no chance I'm selling. Not a freaking chance. Not a chance. Maybe if we end up seeing, some real data that's actually bad, but it's funny, right? Like the comments there, all these better than expected numbers. It's one of those seasons where good news is bad, because then it doesn't mean that the grander plan of cutting rates might come to fruition. But honestly, I do think that we are going to see a rate cut. I really do. I don't see how you see a raising unemployment and extremely high ages and cost to borrow to get into new houses and all of these things, and then not end up cutting rates. The commentary can say one thing, but they are prepped to cut. We'll end up seeing. But honestly, even if they don't, I don't think that it'll change my philosophy at all anyway. Okay. Let's see. Waiting for SoFi to get to 18 so I can load the boat. Yeah, but what if it doesn't get to 18? What if it gets to 20 and then turns around? See, this is what always happens. And you guys are going to see this forever, is that there were comments to say that SoFi would never fall below 25. And then if they ever do fall below 25, then people say, oh, I'm going to load at 20. Once it goes down to 20, I'm going to load at 18. Once 18 comes, no, I've changed it. I'm going to buy at 16. And then people don't actually end up buying the dip. So today, I'm going to continue buying. I'm going to buy into the names that I had belief in before. And if there is a flight to quality, that means that my buys are going to go more towards the metas rather than the, PayPals or D-Locals or something like this, which might actually have a harder time turning around. Not because those aren't good businesses. It's just because investor sentiment would be harder pressed to invest in those types of businesses. Okay. Picked up 3,000 SoFi shares today. Is this shares or dollar? I guess it doesn't matter. Yeah. Nice. No, I'm not looking to take any margin during these cases. I mean, although it seems very irrational right now and everything is expensive, things can get a lot more expensive from here. Okay. So let's keep that in mind. Things can definitely get worse. However, it doesn't necessarily mean that it's not going to head even higher. Ethereum looking to break below 2,800. I heard a lot of people saying that this is the floor. We will see. It's looking awfully close to it not being the floor. We'll be on for the next little bit so we can monitor these prices as well. Bitcoin, 87,000, broke below that, but potentially maybe we're securing some sort of bottom here, but that happened previously as well. So we can definitely head a lot lower. SBET below $10 a share, $9.37. BMNR, no, not BMNU. BMNU, I mean, that's death. BMNR 2678. And honestly, if you guys are in BMNU and you've been holding it on the way down, honestly, do not expect that one to come back. Like, those 2x leverage funds do not work the way that people think they work. You've seen some comments in chat already saying how they're intraday trading tools, and they are. The longer you hold them, you're losing money because of the margin, because the doubling in those funds that they have to do, that costs money, and it takes away from the funds in general. They have, very high cost to operate. So the longer it takes, the more you're actually bleeding out of what that fund's real value is. So BMNR, on the other hand, there's no cost to hold. People look at this like a levered position, but the truth is they don't have a cost to carry or anything like that would cause them to liquidate if price got too low. There could be continuous selling off as sentiment changes and people think that Ethereum is not, the right use case for Wall Street. And you know what? There's no concrete evidence to suggest otherwise. But we only have, the trend that we're going in. And it looks like more and more stable coins are headed in the direction of Ethereum, let alone more and more dollars heading in the direction of stable coins. But Brian Armstrong today just said that they are doing Ethereum-backed lending now, not just Bitcoin-backed lending. They're now doing ETH-backed loans. So if you want to collateralize your Ethereum to borrow USDC, essentially US dollars, you can do that up to $1 million on Ethereum. Okay. So there's ways to sort of take advantage of a very large Ethereum holding to potentially get USDC. Maybe this is not the right time to do that. There's, obviously risks, but it just shows you that Coinbase for sure, and there'll be many more. You're going to see this from JP Morgan's and the Bank of America's as well. It might not be anytime soon, but that they believe that the cost of or the price of Ethereum will come back. They're not thinking it goes down to zero, or else they wouldn't offer these types of products up to $1 million in USD for just one user, let alone the however many users they might collect. I think they have billions and billions of dollars. What is it, 5-6 billion on Bitcoin-backed loans? So if you don't believe structurally that Bitcoin or Ethereum are real assets, then they could lose all of their money offering you those loans, right? The small interest rate that they're getting from offering you that loan is not worth it if the underlying, asset continues to crumble over time. So they believe in it over time. But this is what crypto winter looks like. We are definitely in it right now. BMNR sitting at 2677. I might have to make a purchase here if we're this low. I mean, this is just crazy. This is half the price of where we were, where were we 2 months ago? 65, now down to 27. 58% drop, 59% drop looks like at the high. Well, not at the high. We reached 71, but just in recent history. But yeah, it sucks. The interesting thing is that because of how explosive, by the way, Walmart, look at this. They're up 5.7% on good earnings results. And this is no small name. This is $850 billion consumer name for the less affluent, more moderate income spectrum of customers. And they just ended up putting up good numbers. I'm really not worried. Like, I'm not seeing any real problems that are suggesting that the economy is falling apart here. If you guys are, let me know. But I want to see some real evidence, not your hunch or your feelings or how you believe that these stocks are going down to $16 just because. I don't believe that. People told me, SoFi was just going to continuously fall. And then whenever we got to 4, people thought that we were going to 2. Wall Street analysts said we were going to 2. But yet the fundamentals of the company were at all-time highs. If we look to Microsoft, Meta, Google, Nvidia, all of their earnings and their margins are at all-time highs. So, yeah. I'm complaining but not selling shit. I completely agree. That's the best way to put it. We can kick and scream. I mean, that's fine. Well, Walmart's the only place to purchase everything, though? That's not how that works. Stocks are not given a reward on earnings for something that they didn't do differently a quarter before. So they need to not only grow each and every quarter, which Walmart does, but then they need to grow faster than what Wall Street was expecting. This is even why, Stephen Fiorillo and I used to argue. And he'd go, Apple's fine. They make $100 billion. Like, no one cares. It's already priced in. It's a $3 trillion company. The thing that people care about whenever they buy into a stock, and this is I'm not guessing here. This is a fact, okay, is that it's the surprise of difference. It's the percentage change of how fast they are expected to grow, okay? It's not the base amount that they are bringing in. The dollar number doesn't matter. As well, I mean, it does, obviously, but then usually the market finds a multiple. And if you're buying into a stock in 2025 or really any time in the 2000s, that market is already set. It's the percent change, the growth difference, the margins that end up making a stock go up higher. So Walmart, the fact that they sell everything is what they've been doing for a long time. That's not making them go up 6% today. What people need to realize is that it's the same customers that are shopping at Walmart as they were last quarter. And what they're realizing is that those customers are still spending, which means they're resilient. They are coming back. They have more to offer. Their margins could be improving because of better ways that they are finding customers, advertising to customers. Maybe some of that is artificial intelligence. I didn't listen to the earnings call yet, but what's funny about Walmart is they are actually very tech forward, and people don't give them enough credit for that. But yeah. Didn't Walmart, I don't care about that. I care about the fact that they double beat. That's the exciting part. They were expecting $175 billion in revenue, and they got 179.5, 2% beat. EPS, they expected 60 cents. They got 62 cents, 3.3% beat. Okay. I bet you there's comments in their earnings call that talked about the health of the consumer. Okay, this is literally what they said. Consumer spend, well, this is an AI summary of what they said. Consumer spending moderation observed in low-income cohorts, that potential tariff impacts and inflation in specific categories could affect future performance. That was their risks. But no one seems to care. Stock's up 6% nearly. Let's go back up. Yeah. Nearly 6%. Yeah, Harry's got a really good way of thinking about this. If the way that I think about building wealth over time, and I've got a good portfolio, but I would love it to be 10 times bigger than where it is. And in order for me to get there, would I want my stocks during this time? Let's imagine, the last time that SoFi hit a peak and it went up to 32. Would you want it to stay at 32 and just flatline until the next time that we see a new high? Or would you want it to make these drops so then you could buy in? See, if the drop was so fast and so sudden, like just a complete elevator down, you bought the dip and went back up, that's fun. Everyone loves that. That's a great dip buying opportunity. What you don't like to do is it drops, you buy the dip, it drops, you buy the dip, it drops, you ran out of powder, and then it drops again. That's fear. And that's honestly where we are. And this is what happens, right? Anytime that we see constant dropping in the market, we've talked about this over the last couple of streams, it can just eat away at your fatigue of being an investor. People start to believe that this game is rigged. It's not rigged. This happens all the time. People are fearful. It's your job to be greedy. Now, if you actually believe that there is fear and that we deserve to be lower, well, then, hey, you can go ahead and try to trade in this market and try to time that. I'm not going to be with you on that. Okay? The fear and greed index right now is at an 8. Historically, that is like the time to buy. This is where we are. Okay. Whenever it's at extreme greed and we're at like a 90, you know, the historic pattern is to sell. And to be honest, I don't even sell that much over there either. Like I really do try to listen to the greater investors that have come before me. And Warren Buffett doesn't sell whenever his stocks get overextended. He's not trying to time it. He buys on the great companies and I'll see you next decade. That's what I'm trying to do. You know, it's hard being a market commentator during those times because, you know, you can have fear and people freak out. But really, what position of Coinbase's business has gotten worse while crypto has sold off? You know, have they improved their tech stack, found new enterprise clients, and you know, worked through this storm? They've been around since 2013. You know how many times since then Bitcoin has dropped over 90+%? I think it was 4 times. I think 5 times in its history, but one of those was before that. This is honestly nothing to them. Like Brian Armstrong he's sleeping well at night. He's probably got an 8 sleep mattress. He's just, you know, just perfectly ventilated sleep. He's having a good time in his, what is it, California King or something like this. Knowing that, that we're going through a crypto winter, he'll see us in the next couple of months. Palo Alto ended up showing off earnings. I don't know. I think they ended up, double beat. EPS beat by 27%. Revenue is flat. Well, flat to slightly beat 0.5%. PayPal 58.59, by far the cheapest the stock has ever sold or traded at in their entire company history. $54 billion and then an additional $8 billion of cash. I mean, that is a cheap business. Payments are just getting wrecked. Add yen back down to 14.86. I'm curious why Navan is up because that's a recent IPO. Let's go back to big tech here. Meta is at 586.50. We're in the 5s. We're healthily in the 5s right now in Meta. That's pretty crazy. Nvidia down 2%. Oh, man. That's funny. That's funny. Who here was with us yesterday for the Nvidia earnings call? Tell me. Tell me. Yeah. And did you guys like what you saw? Because to me, I saw in a re-acceleration of growth. Margins were high, guidance skyrocketed. We saw an increase in their beat on expectation. It was mid. That's a troll. This is literally, and I'm not kidding, the greatest quarter we've ever seen in public markets history across, 4,000 businesses. That's no word of a lie. They beat on revenue what most companies like even that's what Mitt said. He said Palantir's quarter was better. I'm like, dude, Nvidia beat by more than what Palantir puts up in annual revenue. Like, it's not even remotely close how unbelievable Nvidia's quarter was. Like, let's put it into perspective. They're a hardware name that beat by 4% on revenue, which was an additional $4+ billion or whatever. Or maybe guide beat by 4 billion. Sorry, let me rephrase. Their guidance improved by more than what Palantir put up in the last 12 months or whatever. Bubble is what everyone wants you to think right now. Yeah, they are allowed to think that. You know, I'm perfectly fine with that, with them, you know, believing more in this bubble theory. The numbers that we are putting up is what you have to focus on. That's the reality. Okay? We're not seeing slowdown in guidance. We're not seeing compression in margin. Like, honestly, I've defended PayPal a little bit, but you could put up way more of a theory that, hey, there's one thing coming out of the CEO's mouth, and then what they're really showing is 2 to 5% revenue growth next quarter, and you know, guidance is not looking strong, and the take rate is compressing. Those are not good signs of, you know, healthy pricing in a market going forward. That's not what we're seeing here, ladies and gentlemen. We're seeing the largest company in the world improve margin, improve guidance, reaccelerate growth. Like, I just want to, like, I could die on that hill. Reaccelerate growth and expand margin is literally all you need to find some of the best businesses in the world and a growing total addressable market. I'm going to keep going. Founder-led, you know, one where the administration and regulation is not in your way. It's actually trying to pave your way. I don't know why this switched to CCL. I didn't type anything into my frickin' looking at CCL. Nvidia is down 2.2%. Let them have fun. I'm going to hold through it all. And if this gets so stupidly low, I'm going to have to buy more. Because like I said, there wasn't a single... Actually, you know what? There was one person that said bad things about Nvidia's earnings. Listen to this. If you guys didn't see Nvidia's earnings, this is a fun video to watch. Where was it? I know Amit posted it. We'll find what he said. Here, look at this. This is too funny.
You each and every quarter. And I'm going to ask you again, is this print enough to get you to change your rating on the company?
No. Short answer, no.
Okay, why not?
I mean, it's an okay quarter. It's a good quarter, decent guide. You know, they, you know, at GTC DC 2 weeks ago, they put out that big revenue number, $500 billion over 5 quarters in revenue, which shocked everybody. I think what happened is they got more allocation from TSMC than they were expecting, so that's upside. That was more than I was expecting. But that's flowed into numbers now, right? And you start listing all the things that could go wrong with Nvidia. That's a longer list than the things that could go right. So I still think they're challenged. I still think this is you know, but I'll give them credit. This is a good quarter. I had actually raised my estimates last week because my checks were telling me they'd be doing pretty good. It's okay. I'll give them.
You got to give him one thing. I mean, it looks like he's trying to show you that he knows the industry. He's like making a competitor back here. He's building like a rack scale GPU system over here. At the end of the day, this is the most cope that I've ever seen an analyst pull out. Listen to this last comment that he makes. Oh man,
one quarter. It's more than one quarter game here.
Jay,
it's more than a 1 quarter game here. Yeah, fully aware. This is why I posted this. It is more than a 1 quarter game. Look at the jump up from Q2 to Q3. We're talking a bubble here. By the way, guidance looks even better than this. We're talking like $66 billion next quarter. It's literally off the chart. It would be like up here. Like, it's sickening how much this is not a bubble. Jay Goldberg at Seaport Capital, I'm sure he's a nice guy. He actually looks like a good dude, okay? And we'd probably get along. I'd love to have him on the channel to talk some crap. But before he comes on, Jay, I need you to be fully aware. I don't care for your analysis of this business at all. He's the lowest person on the street. He's the only person in the entire market that has a sell rating across all of Wall Street, which is Nvidia's like the #1 most covered stock in the entire stock market. He has like a 20% success rate on Wall Street, and he has for 2025, a average return of -7%. Okay. -7. He's the only person in the entire world that's lost money this year. I like, so, those are the bears. Believe him. Okay. Go believe him. Don't listen to the countless analysts that are looking at this multiple and being like, wait, how much is Nvidia trading for it? You know, what is it? 183? Like, what are we talking about here? So I don't believe what they have to say. I'm just looking at the pure numbers. I've been doing this a long time. Okay. If we take a look at the multiples, we're looking at a PE ratio of roughly 46 times. Can be expensive. You know, that's not nothing. That is expensive. And then you look at the forward PE and it's 31 times. And after today, it's going to be with the sell-off, you know, maybe 30 times, something like that. Next year, it's 25 times. Next year after that, it's 19 times. Like you're really... Stephen Fiorillo put it in a great way whenever I was talking with him yesterday. He said, if we were to give Nvidia the price that, you know, Jay Goldberg wants to put on Nvidia, which is $100 a share, it'd be trading at like 11 times. Like, what are we talking about? 11 times next year's revenue. Like, are we trying to price this as if it's going to grow slower than Altria Group, which has a really strong dividend, and tobacco is being essentially anti-regulated, being taken away, actively promoted for people to stop using, and you have to put pictures on the boxes for people to like say, hey, no, legit, you're dying of cancer. And then they're like, no, Nvidia should be up there. The best technology company the world's ever seen that's starting a new technological revolution should be where Jay Goldberg puts Nvidia. Yeah, right. I don't know. So I'm just, you know, trying to price that in. Meta here, like, okay, what are the concerns on Meta? And remember, guys, I know a lot of people want to point to some macro concerns, okay? But I'm not going to spend hours and hours and hours trying to decipher the difference between likely several more members of the committee, whether or not they are going to do a 25 base point cut or whether they are or not. I mean, it's such a waste of time, okay? They will or they won't on December 10th, and all the information that I'm seeing is pointing for the fact that they need to cut, okay? Unemployment's going up, mortgages are really high, and the age at which people are getting their first home is like in the 40s. That is the data that I'm looking at. A bunch of these people like trying to like look is like, okay, Powell's wearing a certain tie and he blinked 3 times and he coughed and enough. That's so boring and probably doesn't get you anywhere anyways. If we look at the actual performances of these businesses, I look to Meta, okay? This company has seen a decent sell-off from, you know, what was it, 780 roughly down to 580. And what needed to happen in order to find that sell-off? Well, revenue needed to come in at a mere growth rate of 26.25%, okay? Reacceleration of growth, bringing in $51 billion. Now, this is an age-old company. Mark Zuckerberg's done very well, but legitimately, Nvidia just put up $57 billion, and the quarter before that, they were sort of at September levels. So they jumped from the September level revenue of 2024 for Meta all the way past by an additional $6 billion. Like, the amount of growth quarter over quarter was insane. No one's pricing that in. Everyone instead is looking to capital expenditures, which we are not essentially seeing how much of this, by the way, this chart is way too big. We're not seeing how much of this capital expenditures is actually leading to their margin growth. Like, literally, Jensen Huang had to talk about Meta in his own call to say it's their ad models that are actually leading them to 5% increased conversion. Okay, an additional 3% increased conversion on Facebook, 5% on Instagram, and it's artificial intelligence that got them that additional rate. Okay, it's not, that these things don't come free. This is investment into the future. But it's not just the hardware, by the way. There was another comment that, Jensen also talked about with the depreciation. We can actually look here. Let's just type in A100. Okay, this was a quote from Jensen. Thanks to CUDA, I'll let him read it out. Wait. Can you guys hear that? Hello?
Thanks to CUDA, the A100 GPUs we shipped 6 years ago are still running at full utilization today, powered by vastly improved software stack.
Sorry, Colette, I called you Jensen. That was not Jensen, that was Colette. But they're selling GPUs 6 years ago that are still running at full utilization. Okay? They're still finding new benefits for those old chips because they continue to improve CUDA. What's going to happen with Hopper and what's going to happen with Blackwell? Probably going to stay in line with that level of, potential 6-year depreciation, especially if it's looking more towards inference. All I'm saying is that the sales cycle of Nvidia is looking to be very strong. Customers can buy happily knowing that those chips will still be profitable for them long into the future, and that they are going to make massive advancements for the next chips after that, for the Vera Rubins, the Vera Feynmans, and whatever we have the year after that, which honestly, we might even be able to see come next GTC or the GTC after that, if they end up showing a nice long roadmap for data center investment. So let's take a look back at, after all those comments that I made on Meta, which honestly wasn't much. I didn't really talk much about Meta, but margins are improving. Net income is improving. They are not diluting. They're investing heavily in their future, which is what you want from growth stocks. And by the way, growth stocks are much more volatile than the value stocks of the past. However, they have outperformed the last 20 plus years. So you have to get used to that volatility. But in that volatility, you find large growth. You're talking about a company that's, $1.5 trillion, almost $2 trillion before, that's growing at 26% revenue growth. So that's quite good. Now, I just saw a comment. I just glanced over at the chat and I heard someone talk about Palantir down 156. Now, I think, and I agree with Amit, I think the three best quarters in Q3 that ended up showing up was Robinhood, Palantir, and Nvidia. And it's crazy that he's in all of them. That being said, multiples are not lining up across the board. I think Palantir is expensive. And the people who had acquired that company in the 190s and stuff, it's like, what are we expecting for growth in the short term? So I get buying into this name and being like, okay, 10 years from now, what would I rather be holding? A PayPal that's extremely cheap, or a Palantir that's essentially going to be the operating system for the government and many corporations and, essentially be the next Microsoft? Yes, Palantir is that name. However, I do think that there's times to buy names that are both going to be very important, but also you're getting a good price. You're buying things on sale. And that's where I'm finding names like Google, Amazon, Meta, stuff like this. Not because I think that they're going to grow faster than Palantir. I just think the risk reward of getting high growth, not hyper growth, which is what Palantir is doing, but high growth for a very reasonable, 20 times multiple on earnings. Palantir, you're paying, well, right now, and this is at 156, not at 190, but 360 times. So you're buying a lot of metas and, 2.53xing that growth rate now. Okay. And they have to continue to hold up that growth rate in order to shrink that PE. And the only way that the PE actually ends up falling, so the price to earnings, that's what the multiple of the PE is, right? The earnings have to continuously skyrocket in order to bring down that PE. But that also means that the price has to stay flat. So Moomoo, honestly, here, I'm giving an anti-advertisement. Never use Moomoo. I didn't type a thing. It just switches stocks. I don't know if that's a setting, if I can turn it off. I'll apologize after. No one used this company until I find out. Okay. But Palantir, the price has to also stay flat while the earnings expand in order to bring that PE down. So if you expect that the price is going to grow at the same rate that earnings are, then you're buying a company at 360 times PE. That's a $400 billion company, $500 billion company. It's way too expensive for me. And I'm not talking about the actual product. I'm not talking about, how much they're going to grow into their very, very fast growing total addressable market. I've got no qualms about that part of Palantir. The next breath, you can look to a name like Nvidia, who also has a clear moat, clear pricing advantage, is being priced at 30 times, which is 1/12 the price of Palantir. Okay. Growing at the same rate. How fast did Palantir grow this quarter? 63%, something like this. Let's take a look. Palantir last quarter grew at 62.8%, 62.8, and Nvidia grew at 62.5. And one did $57 billion in revenue, and the other did $1.1 billion in revenue. If Palantir can prove that they can grow at this rate at a 50 times larger scale, then that's pretty exciting. But they need to 50x their revenue to be where Nvidia is today, okay? And the market cap only needs to essentially 10x. So there's essentially you're paying essentially 5x more just on a price to sales ratio for Palantir. So right now, even though Palantir is falling, I'm not touching it. I think that it's an amazing company. Growth can continue to expand to 80+%. So, I think they're going to do amazing. Alex Karp's one of the best founders. I do, I respect the company. I respect the founders. I respect the positioning. I respect the margin, the pricing advantage. But there's other names in the world that also command that level of moat that are still not priced this high. And it has still fallen from 190 to 156. But yeah. Nvidia, let's take a look. Down 2%. Down 2% on that reacceleration of growth. Yeah, is what it is. The market is going to be irrational these days. So it can happen. Let's take a look at ETH. 28 didn't fall below that 28. I heard from a couple people that said 2,800 is the floor. Is that true? Are we seeing it? Should I put in a little order for BM&R? Where's BM&R? 2650? I'll put in a little order. Okay. While I'm doing that, let's check on Bitcoin. And in fact, let's actually hear some commentary, just so I don't bore you guys. Dan Niles ended up talking about Nvidia's quarter. I wanted to hear about that as well. So let's switch over to what Dan Niles had to say about Nvidia's Q3.
Christmas with its Goldilocks quarter.
It did not save Christmas. Everyone still hates the market right now. Let's continue.
Let's bring in Niles Investment Management founder and portfolio manager, Dan Niles. Good to talk to you, Dan. Appreciate the time.
My pleasure, Carl.
We've gotten through AMD Investor Day. We've had Microsoft Ignite. Now this Nvidia print, a lot of catalysts. Where does it leave us?
Well, I mean, you really needed a solid printout of Nvidia. And as I wrote up on Sunday, I thought we were going to get it for two reasons. The first one is if you look at all their big customers that already reported, Microsoft, Google, Amazon, etc. You had CapEx expectations for this year at up 60% before they reported Q3. And when their customers reported Q3, those numbers jumped from up 60 to up 70. The second thing was at NVIDIA's GTC conference on October 28th, the CEO said, we have visibility to $500 billion in data center revenues to the end of 2026. And so when you did the math out, you go, wow, that sounds like a pretty strong quarter. And so you had kind of the Goldilocks print where you had about $2 billion of upside to the current quarter in terms of revenues. But interestingly, they guided about close to $3 billion above consensus for the upcoming quarter, which tells you that they're really seeing strong momentum. And you can see.
But honestly, think about that. They guided for $3 billion, which they always beat their earnings. But they beat on guidance by $3 billion. So then all of the Wall Street analysts are going to now readjust their prices, which they've already done. And then they're going to have to see this price again next quarter and then readjust it after they beat it again by hopefully, 2 to 4%. That is truly spectacular. This quarter was a one of one.
See that in their revenues, where 2 quarters ago, revenues were up 56% year over year. They just reported up 62%. And then they guided to up 65% year over year for revenue.
Yeah.
So that has to make you feel good.
Earnings estimates for the Mag 7 for 26 now are going higher.
I'm so easily baited by your comments, but I'm really curious whenever I see things like this cult. I don't understand what the cult is. Walmart's trading more expensive. Costco's trading more expensive. Like, where's the cult in buying a company that is putting up $22 billion of free cash flow on a quarterly basis, by the way? I should clarify, on a quarterly basis. So they're going to be putting up essentially close to $90 billion in last 12 months free cash flow. What do you do with that? They can go, Nvidia can go out and buy and strengthen their position in the markets in any way that they want to in order to continue to stay on top. New software development, new quantum name makes a breakthrough. Whatever you guys think is a potential risk to their business, you can just acquire that entire business. They can pay 5 times over asking. They can pay 10 times over. They have the chips. What does that mean? By the way, I bought a little BM&R while Dan Niles was talking. But did we end up actually seeing a bottom here? Hood ended up seeing 106 at the bottom. BM&R 26.23. Coinbase 236. Let's check the Qs in the SPY. NASDAQ 100 ended up bottoming, maybe coming back. Nvidia 181.78. Let's see if maybe that was the bottom just for the day. I mean, we feel like we've hit a lot of bottoms, and then we end up bouncing back. This happens. I've been away for 3 hours. What the heck happened? Honestly, not too much. There wasn't too much. In fact, some of the news pieces that did come out that I didn't even get to talk about were not even bad. Like talking about ceasefires with Zelensky in the Ukraine. Like, that's not causing a market meltdown. Oh my God, Moo, I did not switch. Is it seriously? Is that a setting? I'm switching to Weeble after this stream. You guys will never see this software again. And not that I even use this thing, but if it switches to another chart, 2 hands, keep the hands up. I live in Hawaii and woke up to this. That's funny. I honestly just use this because I like the colors. I find it easy on the eyes. It's very nice and dark. But I don't even trade on this platform. Okay. Triple Q is down 1.3%. Maybe we've hit some sort of bottom. But we've sort of said this over the last 5 days, and then that's continued to just fall and fall and fall. So we'll see. Wow, it does put it into perspective what this fall looks like over the last 5 days. That is incredible. That is just incredible. Even some international names like Nubank are falling. Well, I wouldn't call this a V-shaped recovery here. I mean, it's definitely trying to figure out. There's still some sellers. There is definitely some concern here. Wow. Now we need calm. Yeah, it's definitely good for the traders. You can definitely take advantage of that sort of thing. Rusty with the 1 gifted sub. Rusty, you don't even have your own subscription, brother. You don't need a gift. You need to gift yourself a subscription. Thank you, my friend. I do appreciate it. The Fed made comments immediately after Nvidia's earnings. I know, it's like they do want a little bit of like continued pessimism in chess. Like the second we see unbelievably good report, they go ahead and sell off again. In the comments today, I didn't even think were like warranted. I really do think that we're going to see a Fed rate cut. I'm not here to actually the chance of a Fed rate cut is climbing. Actually, if we take a look here, we're now at 41%. This was under 37, I think, and then the day before is 31%. We're actually slightly climbing. And I do think unemployment's at 4.5%. We haven't seen this since October of 2021. Those aren't good signs. I don't care what the comments are coming out and saying. I just feel like it's like not fear-mongering for that purpose, but like I almost feel like they're trying to suggest like, oh, well, you can't time us. Like, we're going to do whatever. It's like Jerome Powell came out very clearly like a few months ago saying, yeah, we're definitely going to see 3 rate cuts throughout the rest of the year. And then he says, hey, it's not a foregone conclusion. And then he made it out to be like someone else said those words. You said it. The whole reason why the market was at 100% is because of your words. So, yeah. And the exciting part is, George, what you're saying, whether it's political or not, and I'm not here to play either side, is that if Trump wants a more dovish Fed and he wants more rate cuts, which is clear, we are definitely going to get it at least in May. Okay? So if the pain consists till May, then that is some relief. If it only lasts to December 10th, that's a lot less of a lot less pain, but that's exactly why I'm not trying to play the market. Because commentary could come out tomorrow that says Jerome Powell agrees that, you know, rates need to come down, and then your whole timing of trying to play the market has just vanished. As I always say, it works until it doesn't, and things can flip on a dime. And we were not. The uninstall button for Mumu is it's getting ready. They don't get me to sell. I'm holding the line. Well, I'm with you there. It's so funny. You listen to the greatest investors in the world, and they say things like, time in the market is better than timing the market. And you're like, yeah, but I don't want to hold through the pain. It's going to be painful for the next 3 months. Like, what you're doing by saying that it's going to be painful through this X period, or, stating that where the bottom is or something like this, that's timing the market. And that's been so historically, like, give a crack at day trading. I'm sure all of you guys have. And the reason why 0.1% of you guys are still doing it is because for the other 99.9% of us, it didn't work out. We weren't as smart as we thought we were. And in fact, I'll go as far as to say I'm pretty much an idiot. Okay. I'm a simpleton and I'm just building money. And the easiest way is that the formula that I found, which is so easy, is just to remain calm and don't believe the FUD. So I see selling off, but I also want to see data to back that up, and I'm not seeing it. I'm not seeing an AI bubble. I'm not seeing, consumers have a problem. Like Walmart's putting up great numbers and Nvidia's putting up great numbers. If those two are getting along, I'm chilling. Like that should be the way that I'm thinking about it. So, as the simpleton that I am, I'm not worried. Warren Buffett told me to stay calm. I'm going to remain calm. That's essentially the way that I've done it for the last 10 years. I've done very well buying into tech stocks because I think that if you buy into names that just have a technological advantage, which gives you a margin advantage, software allows you to move faster than hardware. And by the way, a lot of people say that Nvidia is a hardware name. They make hardware, but they're not even in the part of buying the foundries, the property and equipment, or the data centers, or any of the things that take any time, equipment, or asset depreciation or anything. They take on none of those risks. They're essentially just a designer, okay? They have engineers that design it. They send the plans to TSMC, and they work with their customers to make sure that those products are to their specification. They don't touch any of the products. So I'm very comfortable in the positions that I have, which, if you guys don't know, are like Nvidia by far over 40% of my portfolio. Shopify, number 2, SoFi, number 3, Robinhood, Nubank, more fintech names, ServiceNow, Google, Amazon, Meta. And then, honestly, I've been acquiring a lot of crap lately, but that's because I'm having fun, I do this as a job, so having a little bit of fun here. But honestly, where the high majority of my money is in software, in tech, in picking the companies that have structural advantage, regulation advantage, founder-led, or quasi-founder-led. I'm fine with that as well. The Anthony Notos of the world, the Elon Musks of the world. He didn't found Tesla. He's not actually the father of Tesla, but he's the father that stepped up. You've ever seen that? Yeah, where is Tesla, by the way? Is it under 400? No, above 400. 405. Wow, that's pretty great. Okay, let's also see where Meta is right now. If they're bouncing 187, I want to check Amazon 219, and the Googs. Actually, I'll do Google. I know most of you guys like Google. Google 295, bounced off 291. I mean, maybe we're in a little recovery here. SoFi down 3%, 25.93. Hood 109.46. See, unlike many of these companies, if we actually end up scrolling down, Hood is and deserves to be, mind you. I love Hood. I love Hood, but they deserve to be down here because fundamentally, they are, their product will be hurt if retail is fearing this market. So that's the only difference. big tech is not going to change how they're spending regardless of where rates are. They're not going to adjust, their plans based on a 25 basis point cut. I don't believe that at all. If Oracle's having a problem buying GPUs, by the way, they don't even need all their customers. They were fully sold out. So there's a lot of additional demand that's sort of overflowing how much capacity they could actually sell to. But regardless, they have so much pricing advantage at a 75% gross margin, or 73.4, or whatever is that they could help with their pricing in order to make sure that their customers fulfill those orders. That's perfectly fine as well. It's also what I love about tech. They're extremely flexible, they move fast, and they have pricing advantages. So, yeah, that's a huge thing. Rusty with the other membership. He became a YouTube member this time, not just gifting them. Thank you, Rusty. I appreciate that. Okay. Weeble's earnings today. Ooh, we should keep an eye on that. I've not been following Weeble. However, looking like one of the few names actually in the green here. Especially, that's kind of weird because they would be in a similar boat to Robinhood, where they are structurally being hit by the markets being red. But yet, no, they're up 1.8%, but $8.37. That's pretty cheap for them. They've maybe they did some pre-selling. They did some pre-falling before it ended up turning around. AppLovin $5.93. D-Local actually up today 1.5%, $12.90. Broadcom $3.58. Also having a great day, but bouncing off of the bottom there, similar to the other companies. Shift4 up 1.2%, $66 a share. Shopify up 1.2%. They're doing very well. Chime up 1%, $18.61. Google also green. Ooh, TSM's also green. It's so weird. TSM's green, Nvidia red. I mean, from a multiples perspective, Nvidia is more expensive. Like, I'm aware, but also they have higher growth and higher margins. But, I do find that interesting that they're not quite trading in line. Let's check some of the Neo clouds here. Nebius at $90.70. I just recently purchased into this name as well, and honestly, I should probably find some cash to buy this dip, because I'm a big believer, especially after that. Like, for real, take a look at Nvidia and the Nebius and the increase in guidance. What does that tell you? Not for the Metas and the Microsofts and the Googles, because what it tells you. Well, actually, for the Microsoft, Google, and Amazon's, what it tells you is that they're going to have increased cloud growth. For Meta, it could be continuous concern because they continue to spend, but they're not offering enterprise cloud services. So that's a little bit of a concern to certain investors, not me. But for the Nebiuses, for the IRENs, for the Cypher minings, it's actually a really good sign to know that they just increased their guidance by an additional $4 billion. It's not that Nebius is doing all this spending. Like, yes, they're buying up all of these chips. Oh, CoreWeave too. I'm not picking a name here. Well, I mean, with my own capital, I have picked Nebius, but CoreWeave as well. Like, all of these names, they're only going to go out and buy more chips if they need more capacity. What we heard from Nebius is that they're completely over capacity. Every chip that they set up is immediately oversubscribed. So then they need to go set up another one, and they need to go set up another one. That is a great place to be, both for Nvidia, which, considering the fact that they just gave guidance to say, hey, it's $4 billion more than expected, $66 billion over 62. That means great signs for the cloud names like Google, Microsoft, Amazon, Nebius, IREN, CloudWeave, or CoreWeave. Which ones did I say? IREN, CoreWeave, Nebius, Cypher mining. There you go. Let's go find a quick video while I do a little dip buying. Because you know what? To all you guys saying, hey, and by the way, don't follow me into this. Like I said a second ago, I'm a simpleton. Okay. I'm not suggesting that I found a bottom. I'm going to continue to buy all the way down because I don't know when we're going to reverse. So you guys that suggest that maybe Nebius is going down to, why did this freaking switch? To suggest that maybe Nebius is going all the way down to 65, you can make a lot more money than me taking a big lump sum and putting it down where you guys think the bottom is. But for me, I don't know. So I'm just going to, keep buying on the way down, or actually in the case of Nebius on the way up, because my first buy was 84. No, I know a lot of you guys got in before me, but I still feel comfortable with that price. Okay, where is Hood? Now, like I said, Hood is one of my larger holdings. I love Robinhood. Super big fan of the name. But there is going to be some structural, like fundamental problems if the stocks go down. Unless like short selling and prediction markets and their credit card products and all these things are picking up steam and everyone has just gone from long to short in this market, which I don't think is what's happening. I think retail is smart enough to know that they don't really like shorting products. It's not a good game. I don't believe in it. But Hood is going to see some problems here. Unlike the cloud names and everything, this is just sentiment change. This is just people not believing whether or not Nvidia is going to be a real thing or not, or if there's going to be some breakthrough technology that somehow replaces them, or can they offer the same high pricing as before? That's, speculation. What Robinhood is going to see is going to be a little bit more real. Tanner, are you streaming BM&R earnings tomorrow? Yes, I am streaming BM&R earnings tomorrow. It'll be tomorrow morning. So I got to go to bed nice and early. Rates need to come down. Definitely. It would definitely help, especially with the companies with a much tighter margin, right? That's the thing. Like whenever you look to like a SoFi would love a rate cut. Nvidia, I don't know if it even matters all that much. Like, essentially, the way that these cloud providers are looking at it is that all the data center spend, if they go in and buy a GPU for $1 million, they can essentially get 8 million out. Like they're buying chips that are going to make 8 times their money. And for every step up in product from Hopper to Blackwell to Vera Rubin, that actually looks to be more and more and more. So that's very exciting. Nvidia or SoFi and the likes there, they need a rate cut because they are making a much smaller margin. Maybe a little reversal coming in right now. Just as I was saying that I was going to go put on a video so then I could go buy some dip. Or buy the dip. Buy some dip sounds like I'm into chewing tobacco or something. No. Will SoFi go below 25? SoFi will never go below 25. Look at these comments right after another. I think the true is look at all you guys. I'm not doing chewing tobacco, relax. All the people in like Altria group and I actually don't know if they which one of these companies between Philip Morris and Altria and all those even do chewing tobacco, or is it all of them? Who cares? We're the tech channel. We don't care about tobacco companies. We're looking for companies that grow at 63%+ rates. Speaking of 63% rate, where's Palantir? Palantir 158. Bitcoin 87,300. Under 90K. Do you guys remember like celebrating being above 110 and everything? Like that was real. What how high did it get? 126,200. Those were the days. Nice big sell-off just because that's what crypto does. It happens. Ethereum, 2850. That means that BMNR is at $27. How come a lot of stocks are moving in sync? Because we're not getting any news on these companies, right? So a lot of the times it's even just indexes. You have a lot of money pouring into the SPY or one of these names, and those companies hold a ton of each of those names. So markets are reacting to the macro. If you think that we're not going to get a rate cut, that's going to not just like, if you're a portfolio manager, you're not just trimming your JP Morgan, you're trimming your JP Morgan, your Bank of America, your SoFi, your, all the names that might be affected by interest rates. And then a bunch of people see Bank of America go down. They go, oh, okay, well, second order effects of those banks going down are the companies that are being funded by those banks. So then those go down, And so we see all these, circular effects of like, hey, well, this domino started to tumble and then it gets all the way around to, like it's almost the same thing with like Amazon. Does Amazon benefit from artificial intelligence or do they not? Because if artificial intelligence is real and we see full self-driving and we see agentic models that help with, a lot of their workflows and better advertising, and then that leads to robotics eventually to help make the packaging and logistics all better. Like all of that seems better for margin. But then what happens to the jobs? And then if we don't have jobs, then we don't have people buying those packages in the first place. So is AI better for Amazon, or does it actually lead to just a lot less spending? And so Amazon in general just like completely falls apart because there's like humans don't have jobs. So we'll see. Any expectations for BMNR at earnings? Yes, my expectation is that we see the outstanding share count, and that's honestly really the only thing I care about. We don't really know the value of BMNR right now because we don't know the total share count. And a stock price is just the multiple of the outstanding share count. So on earnings, if we do find out the share count, we could see massive fluctuation in BMNR pricing, up or down. Up or down. Considering the fact that lately, in the last couple of weeks, we've seen a lot of not only increase in their Ethereum holdings, but also their cash holdings as well. We've brought up their cash from like 97 million up to like 700 million. That leads to a lot of dilution. If they've been under MNAV during that time, does that actually hurt the book value of the business? If they're selling Ethereum at less the book or to go buy more expensive Ethereum just to hold up the narrative, that's not a good sign. So tomorrow we shall know. Yeah, I saw the Cleveland Fed hammock thing. Yeah, she said that they're barely restrictive. It was so the dumbest comments. She said, yeah, I mean, we've talked to some homeowners, but really the people that we've been talking to is these construction workers, and they're saying that it's making construction more expensive. Oh yeah, you gauged a bunch of only construction businesses to see if whether or not their business is more like, if you go to somebody, if you go to a hammer, they're going to tell you it's a nail. Like, what are we talking about? Of course they're going to say it's more expensive. Who knows? Okay. That said, Nvidia 184.50. I also want to see if there's any live commentary right now on what's happening in the market. Do you guys care to see what happened with Walmart right now? I am kind of curious if we if anything's happening at Walmart. It does gauge the strength of the consumer right now. Up 6%. This is another thing that I think is so interesting. Everyone's worried about the macro, and yet the companies that judge the macro are up. like Walmart is the strength of the moderate, or is the gauge for the moderate income consumer. Let's take a look.
Right out there, but Walmart is leading the Dow following earnings. The company hiking its sales and its earnings forecast. Joe, you own this one.
We do, and this is a really strong report. Look, they talked about higher costs ultimately coming and affecting what prices will be for the consumer. And that is something that will be a challenge as we move through 2026. I thought what was interesting, though, is just the overall strength that confirms their significant market share capture, their positioning in terms of the ability to maintain scale and have that scale benefit for them. And then you have to highlight the strength of e-commerce and their ability to have delivery areas broaden tremendously, to be able to lower the shipping costs, work with third-party deliverers as well. I thought that was a really strong strength. So the stock is bumping up here. The one challenge for it is valuation, and the other challenge you're going to have in the coming quarters is going to be much more difficult comps. Stock sitting here at 106. I don't think you're getting aggressive if you don't own it and saying, okay, we're going to rush to buy it here. I think you might be able to get this a little bit lower, maybe in the low 90s at some point. But we do, and we have had positioning in it for quite some time, and we maintain that.
Brent, I saw you nodding a bit while Joe was just talking. A lot of people see Walmart as a read on the consumer because they have the big grocery business, and they've really grown the discretionary business for things like makeup, skincare, et cetera. Just your view of this report, and what do you think it says about the consumer?
Well, I think that it says more about, to me, where the consumer shopping and Walmart's ability to go upscale. If you have Walmart Plus, you know, I find myself more and more ordering from Walmart versus Amazon because they have locations everywhere and you can get what you want in 30 to 45 minutes because they have locations everywhere. And so I think, you know, Doug McMillon and his team over the past, you know, almost decade have done just an incredible job, not only competing with Amazon, but also at the same time, whereas Target has been left for dead, Walmart is effectively competing with Amazon from delivery, as well as when the consumer's pinched, they know they're going to get great prices. And they've obviously increased their skincare, their makeup line, their clothing line. And so I just think it's been just such an exceptional, you know, company for so long. And also unbelievable that I think the Walton family still owns like close to 50% of the stock.
You had a retail analyst on Worldwide Exchange. She just basically said, the stuff's cute now. It's cute in Walmart. People like it. By the way, tariff's still a big part of this story. Williams-Sonoma out yesterday saying they're going to see a bigger tariff impact going forward. We have names like Ulta Beauty on a 5-day losing streak. Joe, you own this one. And as I mentioned, Williams-Sonoma also on a 5-day losing streak. And then coming up, we got another test of the consumer. Ross after the bell, another one of your names, Joe. Your thoughts on this? Not tariff sensitive because they're a discount retailer, but just your thoughts.
Yeah, a lot of the consumer discretionary names that we hold in the ETF, you're seeing a reversal in the momentum, whether that's Garmin, whether that's Dash, whether that's Ulta or Royal Caribbean. Where you're seeing the strength is where there is price sensitivity on the part of the consumer, and that's TJX, that's Ross Stores. So I think maybe some of the positive news that we might have heard from Ross tonight was pulled forward after the earnings report from TJX. I do think it's two different stories. I think TJX is in a little bit of a better position, certainly with TJ Maxx and Marshalls. Be careful with Ross tonight. You might see a little bit of a disappointment on the earnings, but what do they benefit from? They're benefiting from that off-price environment, and that right now is the right climate to where the consumer is going to go.
By the way, to the other point, don't forget about Home Goods. I know so many people that go to Home Goods now and just look at that
Same
space.
store sales 5%.
Yeah, crazy.
I mean,
So-
Home Depot was a disappointment.
One more
It's
retail.
remodeling, I guess.
I guess.
But people are buying pillows, clearly, because a lot of people like to go to Home Goods. One more name, Gap reports after the bell.
I don't care about Gap. Let's quickly take a look at Walmart here. Gapping up, once again, 6.3%. Cypher Mining up 5%. IREN up 4%. On the other hand, we have Nebius, which I just bought while I was listening to that call, down 5.3%. But at 90, think I'll do just fine in these names. If you believe that guidance on Nvidia is going up, that means it's going to bleed into some of these cloud names, or at least that's what I believe. I should state. Yeah. Okay. Quick refresh on the chance of a rate cuts. Actually, still climbing again. 41.6% now. So slight indication of more belief in a rate cut that could lead to a maybe slight potential bounce right now. Bitcoin down 5, Upwork getting killed. Jeez. Where's Nvidia? 184.60. Okay. Let's quickly highlight some people not believing or selling off of BM&R. Maybe it's a good play. I'm not that's for your portfolio. However, it doesn't make that the case for everyone's portfolio. The Cathie Wood, well, I was going to say the great and powerful Cathie Wood, and I literally stopped myself. She does some great research. BM&R, 182,000 shares in ARK-K. ARK-W bought another 52,000 shares of BM&R and Bullish and Circle. She is buying the crypto, bearishness. Bullish, which is a crypto name, Circle, BM&R, all buying, actually selling off Reddit and AMD. That's pretty crazy. And to be fair, none of those should be in her ARK FinTech fund, the Reddit and advanced micro devices. Way to go on that one. But selling off a lot of AMD across the board and buying all crypto names. That was for yesterday. So she's nice and in the red today. But if it comes back, it will be just fine for her. Let's take another relook while we look at the market here. Let's check for some news. Fanatics CEO. Does anyone care about Fanatics? Little sports merchandise type stuff. Consumer demand and strategy. Could be interesting. Fear and greed actually ticked up a little bit from 8 to 9. That's probably just on this little bump here, but still, we're talking about under 10 fear and greed. I buy during those times. Yeah. We are 4% off the all-time highs, yet we have fear and greed at 8, 9. That's the lowest levels that we've seen since the Liberation Day, by the way. April of 2025. Ray Dalio was on CNBC earlier saying that we're definitely in a bubble. Hold on a second. Ray Dalio was on recently?
Of the morning, he's here joining us to discuss the markets, the history of economic bubbles, artificial intelligence, so much more. Bridgewater founder Ray Dalio is with us. Good morning to you, sir.
Good morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at Nvidia this morning, and I think a lot of people are waking up thinking, where's the market headed next, has been this question of an AI bubble. And curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in markets. Bubbles, what is a bubble? Right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion, or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money. So it's a matter of who the buyers and sellers are For example, if we had a wealth tax, or if you had a tightening of monetary policy, then there has to be the selling of those assets. So in order to pay those things. So there's a mechanics of who owns it, is it over-owned, and so on. It's not the long-term duration of the earnings. So you think about it, isn't it interesting that we have such a short-term reaction? It's great that what the results are, but this is it's valued as a long-duration asset. So for 25 years, the next 25 years, it's very unknown. We don't know what's going to happen, and bubbles don't happen because of good estimates of what in the future. It happens because of the need for cash. Do you sell that asset? Do you have to sell that asset for cash for some reason?
Well, that's the question, though.
So your book, I thought, did such a good example. I mean, I thought, by the way, your book is fabulous.
Oh, thank you.
But you take the 19...
His book, Andrew Sorkin's book, is 1929. That's his new book.
1929. And then you say, what made it go up and what made it go down? And that dynamic is the way bubbles work, right? And so if you take who has exposures, how much leverage is used, and so on, this is about 80% into a bubble that was 100% would have been 1929 and 2000.
So how much leverage do you think is supporting all of this? Because we were talking to Hudson Evelis in the last hour, and she was explaining this idea that Jensen Huang doesn't see a lot of the transactions that he's been doing. We were talking about these circular transactions where he's effectively taking an equity stake in some business, and that business is then committing to buy his chips, if you will.
Yeah.
A form of vendor financing with sort of a equity overlay, maybe, is the way to think about it. Do you look at that and say that's a problem? It's not a problem? Should we think about vendor financing in a different way? That was something that got a lot of the fiber guys in trouble in the late 90s, for example.
Yeah, I think it's an issue, but I don't think it's the main issue. I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble, and we're talking about for the economy bubble. So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it, and in a leveraged way. In various ways, it has leverage.
What are strong hands? Like, how would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is that they primarily invest their own money. They're you don't have public, right? The weak hands is largely, let's say, a leveraged public, and all united about that. That's one of the key ingredients of a bubble.
Right.
So it's not just pricing, because we have to find out. You know, your book did such a great job of looking at the wonderful companies in the 1920s, and then it enumerated how electricity came out, and General Electric and RCA and so on. And those companies went down 90%, not because of the economy and so on. The bubble burst first because they needed cash. So you have to understand that wealth can't be spent. In order to get money, you have to sell wealth in order to get cash to get the money to buy things. And so when that happens, bubbles burst. So bubble bursting means, let's say, a tightening of monetary policy is classic, but also something like wealth taxes can happen. For example, think about wealth taxes forcing sales of assets that you have to.
You're right. By the way, there's a proposal for a wealth tax in California right now.
Yeah, so state and national, right? State and national. I'm just trying to describe the mechanics of a bubble.
But you said we're at 80%.
Yes, I have a bubble indicator that goes back to 1900, and it just makes it has a number of indicators. How much leveraging? Who has the leveraging? Is it what is the amount of money in wealth that relative to the amount of cash that needs to exist, and so on? These indicators, there are a number of them, show that we're on that on that chart, if I was to show you the chart, it's about 80% of where it was in those two times. That doesn't mean that that's the end of the move, okay? Because bubbles have to be pricked.
Right.
And so you can measure that there's vulnerability, a lot of vulnerability. There's a lot of vulnerability of who's holding what.
Here's my question to you about that, which is if the bubble is at this 80% range on your index or metric, there are folks, we had Paul Tudor Jones come in here a couple weeks ago, and he said, look, I think we're in October of 1999. By the way, the market would still have 40% to go. Back in 1928, Charles Merrill, who founded Merrill Lynch, told everybody, get out of the market because he thought it was a bubble. And he was right and he was wrong insofar as from the beginning of 1928 to September of 1929, stock market went up 90%. And so...
But I think that when you're looking at that, you're looking at it incorrectly, okay? What is a bubble is the definition, right? I want to reiterate, a lot can go up before the bubble bursts. A bubble is an unsustained set of circumstances. It has unsustained amount of buying.
Right.
It has an unsustained amount of valuation. It has, and then there's something that pricks the bubble.
Is there a way to sustain this though?
You can't look at, don't sell just because there's a bubble. Okay. Don't sell just because of bubble. But if you look at the correlations with the next 10 years returns, when you are in that territory, you get very low returns.
By the way, JP Morgan just did a report on this that showed that if you got in at over a 23 PE multiple, typically over a 10-year period, your return is a delta between 2% and minus 2% a year over 10 years.
Yeah.
Which gets to your point.
I just put out today a post on this, and you'll see the charts, and if you go on that. So I think that you have to say it's unsustainable. Then you have to go to the timing. What is it that pricks the bubble, right? Mm-hmm. Typically a tightening of monetary policy, we're not going to have that now.
Okay.
Right? Mm-hmm. But you could have something. In other words, the need for cash.
Right.
The need for cash is always that which pricks the bubble. Because when you have wealth, you can't spend wealth.
Right.
You have to sell wealth in order to get the money to buy the things you need or pay the bills you have. That's the dumb.
Right.
So I think that the picture is pretty clear in that we are in that territory of a bubble. We are in that bubble territory, but we don't have the pricking of the bubble yet.
You know, the TV viewer.
What do you guys think? I mean, I get what he's saying, but I guess maybe one of my questions would be, why does all of the wealth need to have cash just start spreading all at the exact same time? Why does that potentially lead to a bubble? But it is interesting. I mean, I just would like a little bit more clarification rather than a couple-minute video. Yeah, he's not completely wrong. I mean, Ray Dalio's never been completely wrong. For everyone saying that he's washed, I mean, we have to remember Bridgewater's like one of the largest asset managers in the world, created by Ray Dalio. He's one of the GOATs. He's definitely one of the GOATs. But yeah, I just yeah. Can every single large cloud company and business continue to pour away from their cash in their businesses and dump it all into artificial intelligence if they're seeing a return? Where do they see this return from? This is where I don't know if I fully agree with the ideas where some people get into this like, oh, you know, Nvidia is going to be 20 trillion over this next few years, and it's going to create 200 trillion. Like, what do you mean 200? Like, you must be taking from somewhere else to deliver it to AI. So there is some over exaggeration in that field. But whenever you're talking about the replacement of old data centers, which is mainly non-accelerated computing on CPUs over to GPUs, I have a big belief that that over time is going to transition to more NVIDIA products over time and, give way to new players like the Nebulouses of the world that will be willing to run, very efficient data centers for you, or Amazon or Google or what have you, and there will be a transition. A lot of the world's business still is on-prem, and cloud is much faster, much cheaper, much safer. There will be a lot of rotation there. I think that there's big business still that's happening, but we'll see. Okay. Ray Dalio's business is at risk because they can't get new clients to invest with them. That's actually not my understanding. My understanding is Ray Dalio, his entire life, has turned away new customers. They have been very, very much, new customers have always wanted to join Bridgewater. Should I top up on Nvidia again? Let's take a look at the markets. That we faded that going up motion. I mean, we might end up seeing here in the next little bit some brand new fresh lows of the day. We will see. Oh wait, the chat's kind of cutting it off a little bit. Let me keep it here. Okay. CoreWeave at 73.35. Alibaba even fading that growth a little bit. Let's go to the top, see what Walmart's back under 6%. Dutch Bros up 3.3%. Cypher Mining up 3.3%. Block, after their investor day, which brought them up to $65 a share. I'm not buying into this name, by the way. If many of you guys are new to the channel, I am a huge proponent of fintech names and tech in general. I used to like Block. I've got no place in my portfolio to invest in this yoga studio. And that's essentially what it is. You go to work there, you have to bring your mat and incense candles and everything like this. I don't care. I like companies. And this is something that I need to talk about more often, is culture at a business. And a lot of the new investors that I've been talking with over the last little bit, I've started to lean more in the way that they think because of this type of reasoning. Find businesses that not only are very founder driven, but founders set out the roadmap of a business, but what they really do is also the recruiting, which means that you're looking for like-minded people that realize that like work-life balance is not, to make Palantir what it is, to make Robinhood what it is, to make Nvidia what it is, work-life balance is not a part of the equation. So Block might be a great thing for the Dorsey family, but it's not investable in my opinion. And that's not a shot at the people who do believe in that business. But honestly, like, I think he's a great startup founder, and I don't think he's a very great hirer. And a lot of the executive team that they've put onto many of the aspects of Block have been disasters. So if you can't hire, you can't run your business. I've got no space in my portfolio for that. That being said, let's see what's taking the biggest hits today. Oklo down 11%, Ion Q down 10%, Firefly Aerospace down 10%, Bitmine down 9.5%, Bloom Energy, SMR. Honestly, guys, I'm going to be very honest with you. A lot of that looks healthy, including BM&R. I mean, it's a speculative name. But you're talking about space, quantum, and next generation energy being down. It's like, you add them all together and their revenue equals zero. you add them all together and you get revenue of $100 million. I think that's fair that they're down. Take a little off the top. I think that is healthy if there is speculation or concern in the market. Where I don't think it progresses into sane thinking is bringing down the Mag 7. They are the Mag 7. You know what Mag stands for? Magnificent. But it goes to tell you, like Meta's going to make more next year. Okay. Nvidia is going to make more next year. Google is going to make more next year. I know that was under maybe some, maybe not everyone believed in that, but I think that it's, fine to bring down some of the names that are highly speculative, high beta names. If you were a high beta name, you deserve to be down a lot during times of volatility. If the Qs are down, Firefly and Oklo and Ion Q deserve to be, the spitting pits of the market. And I hope that they're the darlings on the way up, because that's what happens in markets all the time. People bet on very exciting projects, and they should pour their money into companies making the most profits and the most buybacks and the most shareholder return on the way down. Defensive. Hello? Did you guys just lose me for a second? Am I back? Okay, welcome. My whole screen went black. Oh no, he's gone. Okay. The Qs finding new lows. Oh no. Dude, how is this possible? Down 1.8%. Am I blurry? I shouldn't be blurry. Yeah, the bubble is popping, guys. Is this another Cloudflare thing? Am I about to drop off? It's not Canadian internet. You guys don't even realize how much I've spent to make my internet muy bueno. I changed the wiring in my house for you guys, okay? I'm all plugged in. We've got gigabits now. I'm here. Okay. Nvidia down 2.4%. We're about to find a brand new low right here. It's looking like they want it. Oh, gosh. It's going to happen. Once you see this text go away. There's only so much I could do. Okay. Let's take a look back at the Qs. Wow. Wow. JP Morgan's down 1.7%. Nubank. Well, we know what Walmart is doing. Salesforce, Citigroup is down. It's all, yeah, I mean, that is deserving too, I guess. If we don't get a rate cut, then financials definitely should be down. But I'm just surprised by the big tech. These companies, as I was going to say, sorry, this is what I was going to say. Share the screen. Is there a screen or no? Can you guys see me or no? Okay, what about now? Hold on. It's showing that I'm sharing it on my screen. Just wallpaper. What the heck? No stocks. Still no stocks. Okay. We'll just reset then. Wow. No, okay. That is crazy. I see what you guys are seeing now. That's not what I'm seeing. I've never had this happen where you guys see a different thing than what I'm seeing. Okay. Let's try this again. Okay. Tell me if you guys have stocks. No. Okay. That's good. Let's try maybe it's a problem. Can I share anything? Can you guys see this? Okay. Nope. Okay. That's great. The market is broken. I'm I think that means that we are officially done. I don't know what to tell you guys. I could try to refresh it, but honestly, I think it just broke. Yeah, I don't know. Ladies and gentlemen, I'd love to be back, but what the heck just happened? Maybe we have another Cloudflare issue or something. Stocks are just dying. The internet's dying here. I'll tell you now, Salesforce is down 2%. The triple Q is down 1.3%. Maybe I can try resetting this somehow. But this all, like, I'm not running this. Here, one sec. Okay. You guys can see me? Let's try this again. Share this screen. Should be able to see some fiscal AI. Let's see. Yes, it's back. It does look back, right? Ladies and gentlemen, we are back. Let's go. Okay. Let's try the Qs again. Oh, yeah. Oh, yeah. Okay, so sorry about that, ladies and gentlemen. Someone ban that Archer guy, spamming that shitty company in the chat. Get that guy. Someone get that guy. Okay. QQQ is down 1.8%, 588. Ethereum down 7%. The trade desk down 3.5%. Let's check back on Nvidia. Let's see if we've broken new lows. We have. Gosh. Okay. 180, 178 right now. It's like we didn't just see earnings. It's like we didn't just see the PE ratio get much cheaper. It's like we didn't just see them increase guidance. Okay. Ooh, okay. So I see some people are worried about the 10Q. I see is also what people are talking about here. The 10Q shows big changes in their inventory. Finished goods up 109%. Yeah, but I don't know. We'll have to see. With such an increased percentage of their guidance, and they said that they're fully sold out on cloud GPUs. Who knows how that ended up getting finished or delivered or something along those lines. I'm not going to read too much into that. We will see. We'll see. Tanner, is BMNR a swing position for you? I mean, yes and no. There's no super fundamental position, or there's no real fundamental business there. So I'm not like, being super excited for BMNR over the long term. But I do think that we're at a really important moment right now where the Clarity Act is going to get signed into law, and many, many businesses are going to start looking towards sorry, looking towards Ethereum as potential investments, technology, to create new payment rails, to create new real world assets, all of this stuff. But yeah. Okay. Let's see. Tesla down 1.1%, under that 400. This was the mark that we were looking for. Gosh, we hit it, eh? 400. Pagaya down 3.4%. They will be hit if rates don't end up coming through. Let me just check rates really quickly. I should have Amcor on my list. Yep, Amcor's on my list, down 3%, 30.49. Finding new lows today. And rate cuts are back under 40% again. So that idea that we were just climbing back up did not end up happening. Yeah. Wow. Okay, let's see what else is new in markets as we find new lows. The Fed is a joke. Well, I think that some of their commentary is a little joke-ish. Like, I'm not believing in what they're saying that much right now, but I do think that they will cut rates, or that they very much should, and that if that doesn't happen, that would be very, very disappointing. Let's check on Tim Seymour to hear about some of the circular financing that's been happening on Nvidia. Currently, no comments about the inventory right now from any of these analysts.
Let's bring in Tim Seymour, CIO of Seymour Asset Management and a CNBC contributor.
Hey, Contessa.
Help me make sense of these wild moves.
Well, not for the faint of heart. I still think there's a question about tech valuations, although Nvidia's valuation doesn't really bother me. But and you've moved with a couple of the other, call them Mag 7s, as we do, where value is kind of interesting again if you're looking at Meta and whatnot. I just think there's this confluence of we still don't know what we're paying for and what it's going to deliver now as a.
Hold on real quick. Just before we keep watching that, Fear and Greed Index back to 7. Back to 7. Remember, we're like 4 or 5% off the all-time highs right now. But like things can get a lot worse. We're actually like technically not even in a correction right now, but it is hyper focused in a few sectors. You know, just when we thought it was climbing back up, they have to go and kick us in the nuts again. Or, you know, if you're a lady, wherever hurts. Back to the video.
Opposed to out there, I still think there is some sense of concern around circular investments. And even though for Nvidia as being a, call it an infrastructure story, an AI infrastructure story on top of its core business, I think it's probably worked for Nvidia. I think for the rest of the market, it's you know, they kind of gave you what they told. We had a chance for the analyst community to dissect and think about that. Certainly the buy side probably expected what they told us yesterday. And I think you get a little bit of that that sell-off.
When I'm looking at the S&P 500 here, the laggard is Robinhood. It's off by more than 7%, but you've got Interactive Brokers down more than 2%. On the other hand, Walmart is leading the S&P as the gainer with 5.8%, that stock higher by 5.8%. Let's talk a little bit about Walmart and what it means to have this really blockbuster earnings report amid quarter after quarter of comp improvement.
And just before we get to Walmart, that's the whole point. I mean, Robinhood and some of the digital economy, those aren't strong hands. And I talk about the, in terms of the investor group. And so bringing it back over to Walmart and where we are with the story, that's hardly cheap, right? If the market's worried about valuations, then they should be a little skittish on Walmart at 36 times forward. But there's a dynamic here that I think is best of both worlds. Walmart is giving you both that investment into technology and maybe AI, but more importantly, really where e-commerce and efficiencies have paid off. They've paid off in the gross margin, although the gross margin was a little weaker here. But I think category by category, we're seeing Walmart is taking market share. But Walmart, more importantly, seems to be more focused on profit than revenue. And I know that's crazy for the world's biggest retailer, but that's part of the story here. And I guess, what's fascinating, maybe the more interesting part about the Walmart story, even though it's the move from the New York Stock Exchange to the NASDAQ 100 is something that embodies and signifies where Walmart probably sees themselves as a company. It also probably helps in terms of where you get follow through from an investor base that are tracking the NASDAQ 100. So fascinating that Walmart is flying in the face of a market that's concerned about valuations when Walmart's never been more expensive relative to itself and even relative to its peer group other than Costco.
Well, that makes it much more like a tech company route right now then. Is Walmart, do you think, a risky bet at these prices?
I think there's going to be the ability to sell off Walmart if we see the two pillars of the story here, which I mean on the demographic story of the consumer. So the lower income consumer and the higher income consumer and the broader merchandise mix. If we start to get any kind of a growth scare, I realize markets overall might be sniffing some of that out. And that's where you would see a lot of pain across markets. But I think until we start to see that, Walmart is very well positioned. Again, we talk about massive investments into technology and where logistics and ERP and what has been brick and mortar for them for a long time is now really, really paying off and showing the difference between them and almost everyone other than Costco. But I still think Walmart is eating into Costco.
I mean, it's true. Walmart is very expensive, and only more or less expensive to Costco, which whenever you compare it to, names like Nvidia can seem a little bit crazy. But Ethereum it just bounced above 2,800 just now, but we actually broke below. Turns out ETH 2,800, that was not the floor. I mean, maybe you could call it the floor if that literally was the bounce. Okay, if that was the bounce right there, I'll still call it. The TA guys can still have it if we stop the bleeding here. 8,600 on Bitcoin. There was a comment that someone made. Tom actually here says, so much for Tom Lee's call about crypto bottoming this week. It's still this week. We're still there, ladies and gentlemen. We got to wait to see. Tom is live. Tom's live where? Tom Lee live where? Where's Tom live? CNBC? Oh my gosh, he is. Hold on.
I kind of
let me go back.
I think you've recognized that Nvidia will often have need to chase the now as Fundstrat's head of research, CNBC contributor Tom Lee, also the chairman of Bitmine Immersion Technologies, an Ether treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for Nvidia, is it? Nvidia, the good folks at Bespoke, your team, you've recognized that Nvidia will often have these kind of wild swings following earnings, but what is your take right now on these markets? Well, I think I'm going to kind of add to what Steve said. I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled
market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading. And if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than relying on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah, Brian, it is. For instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto. But
you
Tom
implied
DeMark,
it in 2022. In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that
This
are the
reminds,
proxy. So that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year. And that's respectfully to every other guest we've had on this fine network and fine show. Because I want to dive in a little bit deeper to what you're saying. That basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
This is the kind of stuff, Tom, it's one of the main reasons that we bring you on, because you understand what I would consider the engine oil of the stock market, right? We know how the engine works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy, watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
very well
has been
known to
really
me,
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So
I think we're there.
we might be at a bottom for strategy.
Yeah.
Looking at maybe the DeMark indicators named after Mr. Tom DeMark. It's a technical indicator watched by a lot of hitters on Wall Street. Tom Lee, a fun strat. Appreciate your time. Really super smart interview. As always, Tom, have a great day. Thank you.
Wow. Okay. I mean, that's why we love Tom Lee. That's why we're, many of us are invested in BM&R. A lot of the times, maybe not everyone agrees here, he does have his finger on the pulse of the markets, and ended up showing why, not because maybe he can't talk specifics about BM&R, but did end up talking a lot about where Bitcoin is going to be, maybe going somewhere to, bottoming out at 77,000 potentially might be the lowest price that he sees over the next 2 weeks or so. And MicroStrategy might be that name to follow via that list. Now, the interesting part is he's almost talking directly to the Ethereum bulls or Ethereum, investors, and then BM&R as well, because there's a BTC to Ethereum ratio. And while it does fluctuate over time, it does stay very, very close, currently at about 0.03. And we could sort of track this here. I'll pull this up really quick. So if Bitcoin and Ethereum are going to trade in line, like he said, these things fall a lot slower than they pop back up, and that there's almost this big coiled spring, and it continues the longer that this pressure from the most recent liquidation period, which he said usually lasts around 8 weeks, or at least happened last time, just ends up shooting us that much higher whenever we return back to being bullish on the crypto asset names. So if BTC is going to crack back up or find that sort of bottom, according to DeMark Analytics, that could also point to Ethereum popping back up, assuming that it does keep this similar BTC to Ethereum, the ratio, which has actually been sort of sitting right at its medium point right here that it's been sitting at over the last, year or so. As we look at the last week, we're, maybe slightly a little bit lower than that, but yeah. Okay, let's go back to the markets to get a little market insight currently on what's happening with the Qs, what's happening with crypto, and everything else technology in between. Okay, BM&R is at 2642, finding the bottom at 2596 for the day. Not saying that it can't go lower. We actually ended up, saying that earlier, and then it continued to drop even further. Bitcoin at 86,700. MicroStrategy actually potentially seeing, is this a little Tom Lee bump here? I mean, these candles are huge compared to Bitcoin. So Tom Lee comes out, he says, no, this is the bottom is in for MicroStrategy. You get a lot of green candles. I wonder if that is the Tom Lee bump. That being said, let's check on the NASDAQ 100 composite, down 1.7% on the day, $590 roughly. We'll also check the SPY. That's at 656, down only 1%. Let's go through the Mag 7 once more, see if they've found new bottoms. 180.95 was Nvidia's low, now 182. That's down 2.4% on the best earnings that we've ever seen. Maybe the 10Q had dropped and there is some inventory concerns. That's not what I'm worried about. There's not a single thing that I've seen across Wall Street that's pointed to them being concerned about inventories at all. Let's check Meta at 586. Let's check Google or Alphabet for those folks. 291.64. Almost green on the day, but back to red. Amazon probably, down 1.6%, even though Walmart's having a great day. Who would have known cloud and advertising and all of these extremely high margin businesses are actually negative to your overall portfolio or I guess stock for Amazon. They diversify via, cloud, AWS, and advertising, one of their fastest growing segments. And they find less of a multiple than the Walmarts and the Costcos that stay pure plays in those segments. I find that crazy, but oh well. Speaking of which, where's Costco on a day like today? 0.6%, nearly $900 PE ratio of 49 times. That's a PE. That's not trailing. That's a PE ratio of 49.2 times. And you're looking at Nvidia right now on a trailing. So not talking about the 60+% growth rates and increased guidance. We're talking trailing 44 times or 45 times PE. Like Costco is squarely not looking forward, just completely more expensive than Nvidia right now. Does that not, make you guys think at all? That gets in my head. Okay, Uber down 7.2%. What the What's happening with Uber? What's happening with Uber here? Uber's getting crushed. 10 PE ratio, 10.7 PE. It's a glitch. Yeah, it's just a glitch. Uber's in a bubble, I guess. Well, they're getting killed by Tesla. Nope, Tesla's also down 0.7%. Okay. What else? We got Microsoft down 1.4. We have Apple. They're probably green. Nope, they're down 0.4%. Nearly $4 trillion market cap. I mean, people may lose their jobs, but they will not lose their iPhones. There's always going to be more and more iPhones. Okay, let's see. Apple is faking earnings. Oh, I don't think that's true. I don't believe that. Okay. The fact that we aren't lowering interest rates in December is 100% the reason. Well, I do think that this is a big part of it. However, the fact that Nvidia is down so much is not purely interest rates. Honestly, if you were to think about it, or at least the way that I think about it, a 25 basis point cut is not even going to affect their main customers. Like, we're talking about Meta, Google, Microsoft. They're buying at least right now, they're buying in cash. The 25 bips that they are going to potentially be the difference of is I don't think changing the strategy here. Not by selling off a 60+%, 75% margin growth quarter. Like, am I the only person seeing this? I feel like I'm crazy. What could be the next Nvidia? You don't need to look for it. I'm gonna shake you. I want to shake you. You don't need one. You found one. It's Nvidia. They're growing at 60%. You don't need to find the next one whenever the next one is still in growth mode. We're still finding it. They just increase guidance here. Okay, let's get back to it. Let's see. Bitcoin recovering. MicroStrategy seeing what a Tom Lee is bringing this back, man. That's so funny. Ethereum, Solana. This is why we love Tom Lee. He brings markets back. Everyone called him Scam Lee, 20 minutes ago. Now everyone's going, oh, we love Tom Lee. But yeah, I mean, it's still 26.61. My average is like practically double that. But, well, no, it's not. But my average is in the 40s. So we got to do some work to get that down, but that's what the powerful DCA is for. Gotta love a DCA. I'm not looking to sell. This just, takes time. Here's a nice little chart for you guys. I think this is very funny. Hold on. Today's move in Nvidia is truly historic. Between 4 a.m. Eastern Standard Time yesterday, 4 a.m. Eastern Standard Time yesterday to 2 p.m. Eastern Standard Time today, Nvidia has both added and lost $450 billion in market cap. Yep. Let's couple that with the fact that they beat on revenue by 3.9%, beat on EPS by 6.5%. The Wall Street estimates expected $1.22. They got $1.30. Let's go ahead and bring up really quickly. I showed this off at the beginning, but there's like 5x the people here. So I just want to show this off again really quick. Nvidia's Wall Street updates. Now there's new ones coming in. Yep. Okay. So there's even newer analysts that have just reiterated. So the price actually has gone up. We're now at a 40% upside, 256. Every analyst, aside from one, says that this is a buy rating. And by the way, Meet Kevin's not the only analyst that can look at inventories. All of these guys know how to go through a 10Q. And by the way, no shade. I'm not suggesting any shade towards Meet Kevin. I've got utmost respect for Meet Kevin. I'm not even trying to say that. I'm just saying that I'm not being bearish here or looking to play the other side. This is my biggest position, so I'm heavily biased towards Nvidia. However, starting after earnings, Jefferies was the first to come out, increasing their price target from 240 to 250. We ended up seeing Cantor Fitzgerald keep their $300 price target. We saw a new market high from Evercore ISI going from 261 to 352. These are all 12-month out price targets. Okay. Increased price to 250, increased price to 250, to 215, 240, 250, 265, 225, 245, 265, 250, 255. Do you guys get what I'm going on? $450 billion sell-off. Okay. $450 billion sell-off, and every single analyst increased or kept their price where it was. Do you know what they also did? Every single one of them across the board increased their expectations for earnings. They increased for 2020, calendar year 25, 26, and 27. I'm not going to go any further than that, but they increased their targets for further years as well. But, it's too far ahead to even be accurate. But you can just take a look at this. I mean, it doesn't take a genius. You look, one day to the next. And look, like January 2027, which is actually calendar year 26, because they are off by a month. So it actually ends up pushing the fiscal year date up 1 year. $6.63 of EPS before, $7.25 the day after. $8.15 for the next year, $9.34 is what they ended up changing it to. Essentially, we've increased EPS for this year by 2.77%, next year by 9%, and then the next year after that by 14%. After that, yes, these are huge increases for the years after that, but the amount of analysts that are actually covering this far is like 3 analysts. But for the next 3 years, you have still, I think, about 50 analysts. So you're getting a nice blend. You got a nice blend. For revenue, all of this, once again, got readjusted. Up 2%, up 8%, up 12%, up 10%. Constant. End up seeing big bumps here. Okay. So, I mean, if I were to guess, I think that we should sell off an additional 500 billion. No, I mean, of course not. Like, what are we talking about? Let's see where Palantir is. Palantir down 5. Okay, what is actually happening? Something must be happening with Uber. There must be an Uber story that came out. I don't follow Uber like that, so was there a deal that ended up happening? They're partnering with Uber to scale their level 4 ready mobility network starting in 2027. A bunch of billionaire investors were buying Uber. Maybe they're selling now. I don't know. David Tepper ended up buying Uber. I'm not seeing the negative story here. Uber's down 7.2%, finding new lows like we might end up seeing right now. This is the Japan reverse carry trade, but most people don't realize it yet. I was reading about that and how they're essentially going to have to sell U.S. Assets to fund the dollars to go out and get their money back. But yeah, I don't know enough about it or how large of a deal it truly is. So honestly, I'm maybe we could find something on it, but yeah, I've not been keeping up. It's the great thing about markets, right? There's just too many. There's 1,000 indicators, and you don't know which ones are going to be right. And in certain market environments and in certain macros, different ones end up being the signals or the thing that ends up bursting. Amit is in the chat, bro. This is ugly. It is ugly. It is. When is Amit buying more shares of Palantir? We're at 157. Like 130, are we buying more? I didn't mean to close that. But we had Tom Lee on. He, well, not on this show, but we had Tom Lee on CNBC. And he actually, I think, sort of curved some of the fears of MicroStrategy, Bitcoin. You ended up seeing them pop essentially the second that he was on that channel. That was quite fun. Tanner stopped talking about Nvidia. I was talking about Nvidia this stream. It's my third largest holding. There's just nothing has happened. I'm just waiting. We're just, if they put out crypto, I'll make a video on it. But until then, I'm just waiting. Nvidia earnings was yesterday. Can you guys let me talk about it for one day? He just made me buy MicroStrategy or strategy. He read SoFi, but it said Nvidia. No, no, they said, look, Tanner, stop talking about SoFi. It said SoFi. Should I add Nvidia? If you truly believe, like there's so many things that you have to believe in order to make Nvidia a real possibility here. That the AI trade is real. That companies are going to continue to buy these chips in order to, improve margins, work quicker, deploy more code as fast as they possibly can. And then if, Broadcom or custom silicon, whether it's Broadcom or other solutions or AMD or any of these other solutions, are not end up taking more and more market share. If that doesn't happen, then the pricing that NVIDIA has can stay high and the train can continue. But that's what happens whenever you're the biggest player of the biggest new market. You have 1,000 competitors. The crazy part is that they just seemingly are not making a dent. Who's buying Uber here? See, this is one of those things. I've been kind of getting a little bit distracted lately. And anytime that something falls and I feel like it shouldn't be falling, I'm buying into it because I'm like, yeah, I mean, Uber's going to be fine. I think it's very hard to stay concentrated and focus on the names that you have the highest conviction in, not just every deal that you think you could make money in. And that's what I'm suffering with. But I should focus on, like I bought more Nebius today. I bought more BMNR. But I'm a huge believer that the AI build out is still actually quite early. So, yeah, I'm going to continue to bet on the companies that are growing at 700+% at positive margins and that will continue to invest because they know that there's customers there that'll pick up everything that they have to sell. Those seem like good businesses. I don't know. Maybe I'm crazy. Yeah. Don't catch a falling knife. I'm 10 years of doing this. My hands are I've been catching knives my whole life. Okay. I don't know. They'll continue to fall. I just continue to DCA. But I'm not looking to buy the absolute dip because I'd rather not miss it than know full well that I will end up, seeing higher highs on the triple Qs or the SPY or something like this. So don't buy a falling knife. I don't know. I think that falling knife should be more along the lines of if it's a business that's getting worse and you're talking about a recovery play, but it continues to fall. I don't believe in it whenever you're talking about buying a business that is, producing the most amount of revenue and EPS that they've ever done. They're buying back shares and they're structurally strong and they're creating a fortress balance sheet. And then people say, don't buy a falling knife. It's like, what are you talking about? Have you guys ever heard of investing in a company in owner mode or something like this, where you don't even know the price of the company? If you were to fully look at this business, you tell me, you assign a price based on not knowing what the company is worth, but you see the revenue, the EPS, the buybacks, like the way that the company works, and then you assign a price. You assign a market cap to that business. And then you look at the stock price. That's something that Warren Buffett used to talk about doing. Not founder mode. I'm not talking about founder mode. But you look to own the full business. If you were to do that, I don't think that people can talk about falling knives. I'm not quite a trader like that. I like to buy great businesses, and the more that these companies sell off, I don't look at this as risky. I look at this as de-risky or de-risking. Whenever Google and Meta and Nvidia all sell off, you're taking away the risk. If you're holding dollars, I mean, if you're just holding the company, then I mean, you've already faced the risk. You're already red on your positions. But whenever you're looking to be a net buyer of companies, this is actually, unless the companies are going to do worse over time, this is actually healthier of a multiple to buy these companies at if they're down, 5, 10, 15%. One tweet from Trump and we could instantly reverse, which is why I'm buying now. I think that this is Powell and the Fed's last FU to Trump before Jay Powell leaves. Yeah, I mean, a lot of the commentary from the Fed recently, I've just completely not believed. I'm such a believer that we get a 25 basis point cut. I don't know how you look into the face of 4.4% unemployment rate, not seen since October of 2021, and then go, no, actually, things are looking fine. Yeah, right. I think the biggest concern is going to be job loss. What is inflation if you don't have a job? In the face of artificial intelligence, the biggest concern to me are going to be jobs. That's what everyone fears, especially in Western society. People are fearing job loss. 40% chance of rate cut. If you were to put my vote, I'd be on that team. But yeah. Okay. They haven't been saying things are fine. They're worried about inflation. No, I know. But I don't think that the risks to inflation, which, we don't even have a lot of data on, but Trueflation is sort of putting that at around 2.5%, something like this, adds up to being at a multi-year high on job loss. And it's okay for you to disagree. Just one man's opinion, and I'm not even that smart. I'm just really good at having a long-term vision on what I think will be the technologies of the future. That's the one thing that I would say I'm proud of as an investor. But yeah, VG is at 7. No way. 730. Oh my gosh. That's rough, man. That is rough. $17.9 billion market cap, 8.6 PE. Wow. And a dividend. Thanks, Lisa, for pointing that out. I didn't even see that. It's crazy whenever things are dipping that there's like just, you start to really be like, wow, that's an opportunity. That's an opportunity. And then you realize you got no money. Yeah. This wasn't a, are you talking about my meltdown? I'm not having a meltdown. Or if you're talking about the market meltdown, it might not be over. And I do think that that's the problem that Wall Street is going to have, or sorry, retail is going to have, is that there's just going to be fatigue. You know, like if this just continues to drop, and especially if we don't drop like terribly each day, but we end up bleeding like 0.6% on the SPY here and there, maybe after a couple weeks, that's whenever it's going to really feel bad. Because then people are buying dips, it's going down, they're buying those dips, it continues to fall. That sucks. You know, in order for a company like Hood to benefit off these dips on both sides, on the options side, on the short selling side, on the long side, it's crazy that they have short selling. It was well timed for what we're going through right now, that you can short stocks on Hood now. That maybe they might be able to come out, you know, on November, which on December 13th, 14th, somewhere there, we'll end up seeing November monthly metrics. And we'll see how retail has held up with the amount of trading, with the amount of crypto activity, if they truly are buying the dip. I'm interested to see that. Grab is $5. $5. That's because they had an A- quarter. So, no, I'm kidding. But yeah, that is crazy. Hey, I mean, whenever you look back, these are the times whenever you look back and you say, like, do you guys remember going through that pain and the dips that we bought? If it just stayed high, we would not be up on our portfolio as much. We would not be able to lower our cost bases nearly as much by doing cash secured puts and all of these things to allow us to buy into these dips and get paid to do so. You know, we were doing covered calls at the top. We do cash secured at the bottom. We'll see. I don't think that they'll be early firing Powell. I don't think that. And I don't even think Powell's not going to cut rates. But that is the nice thing, right? Is that at maximum, like what does this pain last to? May? I know that sounds like a long time, but that is not a lot of time. It's a very, very short, I was going to say bear market, but we're not even close to a bear market here. We're a few percentage points off the top here, off the all-time high. But I do think that he will cut regardless, and then I do think that we will get a more dovish Fed in May. So my advice, remain patient. I think I just saw a tweet from Income Sharks that said sort of the thing that I've been thinking a long time. But the hardest thing to do right now is be patient, and those that can outlast the impatient will be rewarded. It's as simple as that. It's not a matter of whether you've found the next bubble popping or anything like this. People always say this. I don't think that that's going to be the case. We are seeing real margin, expansion from the tools that are being created today. All of you guys probably use artificial intelligence. You tell me how it's improved your day, how it's improved your emails, how it's improved everything that you do from top to bottom. And if it hasn't, it's not because it's not useful. It's because you haven't been using it enough. I use it constantly. I've been using it while I've been on stream. You know? So if that's being done at an enterprise that has 300,000 employees, I just wonder what that does to the output of their employees. Can those people, if they start to integrate with ChatGPT, Claude, Gemini, how does that change their workflow? But yeah. Waymo expansion? Is that what's bringing down Uber right now? Is Waymo expansion? We are on 3 more cities on the map. Tampa, Minneapolis, and New Orleans. Sorry, I had to tilt my head. They were all written sideways. But yes, if that's what's bringing down Uber right now, are they choosing to go Waymo 1 with them and not going with Uber? If that's the concern, maybe, but like they can't even build cars fast enough to even make a remote dent in Uber. People don't realize like Waymo has like 4,000 vehicles. It's still a very small operation. And they are working with Uber in some cities. Some cities they end up going with Waymo 1, which is their own app. And then other times they end up going with Uber. And I think they're trying to see the difference of the take rate, because obviously you have to pay Uber in one of them, but then also you get complete utilization, and they can almost guarantee that you'll do well. Okay. Palantir, are we starting to see the settling out of the markets? It does look like it. As we were sinking back, that was no fun, but it does look like maybe the volatility is calming down. We're seeing it in the volume too. There's not as much volume right now than what we were seeing before. Ladies and gentlemen, thank you all so much for watching. I just wanted to say thank you. We do this every single day where I'm going to come on, talk about the markets during the weekdays to cover all my thoughts in tech, fintech, crypto, these sort of things. We're going to start this new daily show at noon and go to about 2 or 3, depending on the, what's happening in the markets. But really do appreciate it. If you guys want to see more content from me, hit the subscribe button down below. That's all I ask of you. Until next time, bye for now.